All right, Chainlink daily update for Tuesday, September 23rd. So yesterday we looked at more of the weekly macro. Today we're going to look at the real short time frame, the 4-hour chart. Just doing these daily updates, we got to switch it up time to time. So if you liked the video, give us a thumbs up. If you want more help navigating this cycle, consider joining my Patreon group where you get access to daily updates, daily teachings, more educational content in there. All right, so link around $22. So what do we got on the short time frame? Obviously, it failed to make a new higher high here. Lower high, lower low, right? In a little bit of a downtrend on the short term. However, signs of a potential change in the tides is starting to show up here. So when you get these big moves down, you want to look for blow off volume. I would say that qualifies for about 3x the average volume. The blue line is the average. Okay, that's considerably above that. At the same time, you're looking for a major moving average. What is that one? I'm glad you asked. It's the 600 EMA, exponential moving average, on this 4-hour chart. That's a big moving average. Okay, then what else do you want to look at? Well, have we ever done that before? And where do we bounce to? Okay, those are all good things you want to be asking yourself. So, where would we bounce if this is going to continue higher? Well, you want to look for the previous kind of low support region. No matter what time frame you're looking at. Then you want to back that up if you have a major moving average there. Do we have that? Well, this pink line is the 200 EMA. We have a 600 there, which we've so far bounced from. We have our 200 there, also previous swing lows, perhaps our new swing highs. If the bulls are ready to take back over, we must overtake that. Otherwise, the trend is down. Trend is your friend till the end. That's where that trend would start to end in a bigger way. So $23 is our new flip level for the bulls. Otherwise, we're remaining in chop / bearish for the short time frame. Okay, so as we said, has this been a significant level before? What did the volume look like before? Okay, so let's go back. Do we see it? Did we see it? No? Okay. Well, now what do we got right here? Well, there's an interaction with the 600 again, right? Way back in July, right? Towards the end of July. Let's zoom in here. Right here. Okay, do we have above average? Well, not really, but here's the other one you want to be looking for, right? A pretty harsh move down and just a cluster of red volume, all above average, right? Wasn't those spikes like we've just seen recently, but days of 4-hour candles just red and right into, you guessed it, the 600 EMA. All right, and then what did we do? Well, we bounce. Where do we bounce? Remember what we just looked at? Your previous swing lows become your new swing highs. We held there, major moving average. There's the 100 EMA, wicked right off of it, moved down. Could have easily made a lower low there, right? Not much volume, but we didn't, did we? We established a low. We made a higher low, right? This was the obvious spot for failure, at least the first time. So that $23 that we're at now, that we're, the flip level now, is the $17 level back here, right? Now this same kind of thing, right at this point, we're like right in this area. So we're like around $16, right? We bounced off the 15, the 600 before, back in July, August. Made a nice move up to $17, rejected initially, which is expected. The $23 that we're looking at now is our target, but we'll likely face some initial pushback. But what we would be looking for is simply a higher low at some point after that. So we're going to look at that again in just a minute. And then the big sign that you want to be watching for, obviously the higher low is great, but it could have easily just rolled right here, right when we almost hit a high and then a higher high. We failed. It looked like we were maybe going to roll again there, right? But we didn't. So the big breakout candle you want to be watching for is when you establish that second higher high, because then by definition that old trend is over and you're starting a new trend. So you have a low, a high, a higher low, that's first step, and the higher high. You have to have both of those. So making a high is irrelevant. making a higher low is good, but only half of the puzzle. Right there. So August 7th at 4 a.m. UTC time, that's where Link established a short time frame uptrend and a break of that downtrend completely and a confirmation of a new uptrend. And what else? We know it followed, but did you have any sign of that? Well, look for the first time, really, we're starting to get double candles clustered above average volume. And then you see a breakout volume, like triple average. Hello, right? You just established a new uptrend and you got triple average buy volume. The alarm bell should be going off at that point, right? We're seeing how that works. Okay. So let's fast forward this to where we're at now, right? Why am I saying all this? This is what we want to be watching for in the days and weeks ahead. Hopefully days and not weeks, but whatever. So right now we're working on coming up here to the 200 to the $23. Our previous swing low support broken. There's our next target. It's nowhere else. Could we go back down here again? Sure. Maybe we work on a double bottom or kind of a falling wedge here where we kind of move down to this number, right? We've seen this. We saw this in Bitcoin when it was ending the bear market. Saw a similar weekly fractal. Go look at the Bitcoin weekly fractal in late 2022. You'll see something like this. We have this big fall down and move up, but it's like too high to move up here initially. So if we reject here, not all hope is lost, right? This could be loading for a big spring. And it's not that long, right? We're only on the 4-hour chart. This is like 3 days from now, yeah? So we're looking for either this pattern or the other one, right? The other one might being just climbing up the ladder here, yeah? So back to 23. If we don't teleport to 23 by Friday, perhaps we're doing something like this. In which case, this is still going to be bullish as long as we kind of hold this $20 level, which we've talked about on pretty much every video. $19.50 to $20 is pretty key. And if we break this 600, it is only a 4-hour chart, but you don't want to just get trapped under there, right? So that would be important. We wouldn't want to see this again. And I don't anticipate that. I anticipate the lows in Bitcoin being relatively close, if not already in. And if that's the case, then the link, as your grandma calls it, is also about about those levels. All right. So that's the short time frame. What we were looking for. Sip of water so I can keep talking. Watch your volume, right? Anything else that we see, right? Not really. I mean, we'd love to break this downtrend that we've been in since a month now, for a month, almost to the day. That was our last highs. Okay, right? We're trying to break this damn downtrend. We had a chance right here, right? We had a low, we had our high, higher low, whoops, lower high again. So we only had half of the puzzle there. We tried. Now we're back down. But we're only a victim of how Bitcoin can do it, right? It's not alt season, and until it becomes alt season, where alts are dominating Bitcoin for weeks over end. The alt season index is like sustainably over 70. You want to be watching that. If it can do that for several weeks in a row, then we'll start seeing altcoins come to life for good. Until that can happen, right, we're still in the tar pit, so to speak, all right? So far, this isn't the best pattern, right? This is kind of a bear flag, right? We want to break that. And how would we do that? Well, just start climbing above 22. We can start to break that because your flag can't go below half of this pole. And I guess you could argue that, but that's too much, right? So a flag is really started kind of right here. The flagpole, half of that is roughly $22. Start climbing above that. This falls apart, starts to become more bullish. Then you got one more final hurdle here. If you can get above 23 again, everything starts to go our way. And Bob's your uncle, and we all get flannel shirts again. All right? That's what we're looking at. Let's take a look at Bollinger Bands. Nothing really helped there. How about the Gaussian channel? Under it now. Gaussian channel's red, right? But Gaussian channel, just FYI, it tends to act as a low magnet. So if you get too far away, it kind of tends to come back to it. And that's a pretty good stretch away from it. All right. So yeah, it's coming down, but you know, we've got to turn that back green again. We've got to get some fluorescent green candles again. Probably at least going to go into this weekend if things go perfect. So one of the two scenarios, either, you know, test 23 in the next couple of days or retest the 600 around 20, you know, 21 to 20 area. All right, that's kind of what I got for the short time frame for this very fine Tuesday. We're kind of flat on the day all around. Not much has changed with any coins today. So that's what I got for you for the short time frames. I like to see that. That tells me that we have a better chance than not of having a low in. Doesn't mean you can't retest that low, but you know, going dramatically lower or something like that. Not usually after something like that. Okay. Quote and card of the day. I'll often quote myself. It adds spice to my conversation. Sounds like my kind of guy. All right, card of the day. Lamborghini Urus. That is the proper pronunciation. Although I've never heard anybody outside of Lamborghini or people that know what they're talking about say it like that. How many people of you know, maybe yourself, say Urus? That's like a country American guy, right? It's a little annoying, but so is Urus. Like, you don't have to pronounce Parmigiana, right? Just Parmesan cheese, right? You know, like, that's annoying too. Sometimes the correct pronunciation is more annoying than the improper one, right? That's my view. So you want to call it Urus, that's fine. All right. Red day, red Urus. Why not? Imagine you had just all green or red supercars, depending on how the market's doing. You just drive that one. That'd be pretty cool. And then obviously you have your I mean, it's a given. You have a blue, Chainlink blue, front and center always. Supercar, McLaren, obviously. But I mean, to have this on the red days, you don't really feel like it. You'd have to rough it out in the Urus on the red days. All right, they're pretty nice. I'd take one if you want to give it to me. Oh, ooh, the inside's pretty nice. That looks pretty nice. Bang & Olufsen, really good speakers, as you would expect from a $255,000 used car. Please give me some good speakers. That's one thing I gotta have in all my cars. I always get the maxed out speaker system. Gotta have the good speakers. I don't want to hear that rattly shit when I crank it up. All right. A lot of touch buttons. Everyone's going to screens, right? Big screens. Everyone's getting bigger screens. Pretty nice. Embossed in the leather. Very nice touch. Hand stitched. All right. I could go with some contrasting stitching there. Put the red stitching on this side and then gray stitching on that side. That would have been cool. They missed the boat on that one. All right. There's the back seat for the kiddos or the dogs. Imagine putting dogs in the back of your Lambo. I'm sure some people do. If you can afford to buy 2 or 3 Lambos, then who cares?